Hello everyone, my name is Joe Scorsone from Scorsone Enterprises. I know I haven't uploaded a lot, but life's been busy, but I got a question that I feel like I just have to answer in a video to do it justice. So before we continue, just note that everything I talk about this video is not financial advice. It is for entertainment purposes only. I assume no responsibility if you use any of this stuff in your actual personal life, right? We're just having a conversation here. This is not genuine financial advice. I am not a CFA. So, with that out of the way, I got a question, and I broke it down into 4 separate questions for the sake of this video. Someone asked me, does technical analysis work? Then they asked me, do quantitative strategies work? And then they wondered how to build their own strategy. And then I figured, why not? I like even numbers. How do we build an automated strategy? So now the simple answer to all of these is just the word context, right? Everything has to be relevant to what you're actually trying to do. So like, does TA work? Well, yeah. These all work and don't work. It's all in the context and how you use them. So now let's hop into some charts so I can explain things better. These 2 indicators are what we're going to use a lot to show off things. They're my collaboration with LuxAlgo. You guys can learn more about them and subscribe from the link in the description. We're on QQQ right now, and now let's talk about technical analysis. Because technical analysis is what I'll call like the drawing, right? So like the trend lines and the support and resistance levels, that's what we're going to call technical analysis. Quantitative strategies, I'll even call moving averages and RSIs. Any of those indicators, those are quantitative strategies, right? So now, does TA work? And it's like, well, like, kind of, right? Like, just like everything else, like it kind of works, it kind of doesn't work. Nothing in these markets, nothing in the world is going to be 100% effective, right? And so it all boils down to, if you could find a way to, when you're right, you make enough money to cover when you're wrong. That's all it boils down to. Because even one thing I like to bring up is like, let's look at this high right here and that candle right down there, right? Did it bounce because of this line or because it made sense for it to bounce? The line is a tool. That's all any of this stuff is a tool, right? You should be able to, there's a certain level of feel with these things for trading like this. Don't think that it bounced because like there's this line here. Like, what? That doesn't actually play a part in anything, right? Even if you use this line right here and you stop it out right below, well, does that make sense? It's a loaded question and a hard question to answer. Does technical analysis work? It's like, well, you could find success with it, but I would argue that if you find success trading with technical analysis, it's because you're a good trader, not because of technical analysis. I'd argue that for any of this stuff. So now, does TA work? It works with context. All of this stuff works with context. I've recorded this video 3 times, and each time it's like I just say the word context too much. But that's what it all is. Does TA work? Well, if it's contextual for a market to break out or for a market to break down, and there's technical analysis that leads to confluence, well, then technical analysis works, right? But if something that unexpected happens, then technical analysis doesn't work. And so if there's levels of context to it, even in the scenario of like there's a level, like there's a level here, right? Why not? Why did it bounce here and not here? Because it wasn't contextual for the market to keep on bouncing for whatever reason. It's obvious in hindsight. And in the thick of it, you got to work with your emotions enough to know when to you got to work with your emotions enough to know when you're being emotional and when you just want something to happen for no reason. So I'm not gonna dwell on this too much. Like, does TA work? It works as a tool. It's not something that you should be married to 100% of the time. That's honestly, I think, the way you could answer every single does this thing work in financial markets is like, sort of, like, it shouldn't be your end all be all, but I think you'll be all right. At the end of the day, you're not going to be successful or unsuccessful because of TA. You're going to be unsuccessful or successful because of different factors that we'll get into. Now, do quantitative strategies work? So now that's when you get into the moving average crosses. That's when you get into like stuff that I make, right? And it's like why are some things better than others? And we'll go to SPY so that way it can load. And even this, I have this level marked out, right? Do quantitative strategies work? They can offer you a different perspective, right? They can offer you a different perspective, and in some points, it really makes sense to use them because some things we really can't do, right? If I were to use a daily moving average cross strategy, I could do that with a pen and paper. Is my point. I wouldn't, but you could. Even in RSI on something like a daily time frame, it is possible to do it. However, tools like this, like machine learning indicators and clustering, are you going to sit here and do a neural network by hand? I doubt it. So that's when quantitative strategies work, and are useful. That's when they're useful, is to do stuff that we can't do. Order flow analysis. Sometimes it's too damn fast for us to really be able to look at it. Order flow trading bot, like the one I have with Bull Trade Finder, right? These are all. It's contextual sometimes to use a quantitative strategy like this because of things that we just can't do that quickly, especially on lower time frames. On like if you want a day trade using a 5-minute time frame, then it makes sense to use the quantitative tools, because even if we were going a 5-minute, I could manually in the middle of the day look back and think, is there even anything I could use to explain that? And it's like, well, it's at this low right here, at this level right here for whatever reason. So that's why I think it's going to bounce. You could do that in the middle of the day and you wouldn't be late per se. But if I were to try to calculate the moving average going however far back on the Bollinger Band where you need standard deviation, that might take you a few minutes, right? So that's just use a tool, watch it, let it play out. They're great tools, but they're not the end all be all. Even I'll tell you right now, this algo that I sell with Lux Algo, like, do not base all your trades off of these strategies. Anything that anybody makes, do not just make your decision solely based off the indicator. Use your own discretion, right? You're not a computer. That's a good thing about you. Just use your own discretion to use your own discretions. That way, you're not at the will of a computer, right? That's what makes trading. That's what makes good traders great. That's what can turn a good trader into a great trader, is their own discretion, is their experience in the market. That's what I wanted to say. And so again, I'm going to give the same answer. Does TA work? Contextually. Do quantitative strategies work? Contextually. Even I can't tell you the amount of times I do this a lot in my own trading. I haven't traded on spaces in a while for, life gets busy. But here's an example that I'll give right now. Is algo says long, get a move up. It even continues long, and we get this move up right here. Fade that. The prediction is for long. You get the move up, fade it. And you get the prediction up, fade it, right? That works. You don't have to, it's bullish, so I can't short it. Says who, bro? If you need that rule to be a more consistent trader, then you should know yourself and make the decisions that you have to make. But like, who says that you can't fade along after the move? That's kind of the whole point. So that's the point for, right? We have, does technical analysis work? It's a tool for context. Do quantitative strategies work? Well, they could be really useful tools and things that we can't do, like machine learning, like order flow analysis, yada yada, and to make our lives easier. And they could contextualize the markets in ways that we just might not look at, right? So they're good tools. And so now, how should you trade for yourself? And it kind of goes back to what I just said about like fading along or betting against the long. That's like what fading means. If you're not familiar, like fade just means do whatever it's not doing. Just know your personality. Know your personality. Don't feel like a loser for trading on a fake account with paper money. Don't feel like a loser for doing that. Practice, practice, practice. Then just listen to a plan. Have a plan. Back test it even. Sorry if you're my dog. But just trade according to your personality. And use your experience and your discretion to make decisions. You should trade differently than other people. You're not like other people. Right? That's really all I'm going to say about that. Because I want Like how to build your strategy. I don't know how you should trade. You do. Maybe you don't, and that's what you need to find out by trading, right? It is a skill. And how to build an automated strategy. This one is really for my quants out there. A good sign, I'm going to lump this up into just a few good points, right? And I'm going to outline them a little bit. That's why I'm setting it up like this. A few good points. I'll even just get rid of that one so it's easier to see. These parameters right here, when you change parameters, it shouldn't have that crazy of an impact on the outcome. The difference should not be that huge, right? So I'm changing that. It's still loading, right? We still have this short, right? We just have a few differences, but it looks very, very similar, is my point. You don't want things to be very overfit. You don't want them to be sensitive to parameters. That's how you know that you made something pretty dang cool. Is that when you change parameters, the differences in return, if you're backtesting, is very close. The other thing is, if you have when this happens to me, I feel so cool. You have no idea. But if you have an idea, and also I change parameters, look how similar that this looks, the results. Look how similar that looks to the reset after I change parameters, right? It's loading through. If you have an idea for a trading strategy, look, I barely even noticed that it changed. And before you make it, before you test it, before you backtest it, you think, oh, I think this will work. Because you can explain the process, right? That is a great feeling, and that's something that you could go off of when you can explain why it should work. Because these markets, they are predictable. They are not predictable and predictable at the same time. Don't get fooled by randomness. The fact that my algo predicted bullish coming into earnings is purely random. Well, not the algo predicting, but the outcome. The fact that that worked, do not attribute this to my algo. It happened to be on the right side of it. Nope. Right? Because the exact opposite thing can happen when it was right beforehand. Do you guys picking up what I'm putting down here? It didn't keep on dropping off of earnings because my algo was short, right? Don't be that pompous. Some things you don't want to predict into, like earnings. At some points in time, you can say, oh, look at this trend. Algo's bearish too. Hit it. That's what I mean. And also automated strategies. Generally, I'm considering like a computer is trading it 100% of the time. So risk to reward is very important. I think that's important in your own strategies as well. The fact that if you could lose 3 trades, hit 1, and be profitable or break even, I think that's good for the mind. That's my point, is I think that's good for your psychology as a trader. But yeah, I believe that I answer all these questions in this video. Does TA work with context? Do quantitative strategies work with context? And they can make our lives a lot easier. Even this one can make your life a lot easier, right? Let's say you like ELF for some reason, right? I'm not saying it's a good company or not. I'm not saying you should do anything to this stock. But let's say you do like ELF and you see it falling, so you want to add more. So you look left, you think, oh, there's a low right here at 48. There's a level right here at 59. If I come back to those levels, those will be my zones. That is a fine way to think, because you're using it as a tool to help out the decision that you already had, right? Coming to conclusions on things that you can't verify. That's things that you can't verify, and how do I want to say that? Using TA as your only thing to come to a conclusion, using one thing as your only thing to come to a conclusion off of, is where problems arise. It's not the tool, it's how you're using it. I hope that answers every single one of these questions. Again, like I said in the beginning, this was for entertainment purposes only. None of this was financial advice. But I hope that this gives you guys food for thought. Is that one thing isn't better than the other, right? Like, I charge for an algo because I think that it's good. I think I can explain to you why it works without a backtest, because it uses contextual predictions to it. It's like the intersection of the way that ML and a chatbot works and ML and finance to make predictions like this is that intersection. So that's why I can explain to you how these will work. And I had better videos explaining the algo, which is why I'm not talking about too much, and I have a video backtesting it as well, because if you were going to pay something, you deserve to know. But I believe that I can explain and understand why my algo would work before I backtested it, and I believe that I understand why it should work better than a moving average. So that's why I use it. It's not because of the way it looks or that it's a premium indicator, who made it. If it's good, dude. Like, the literal tool isn't going to make or break you. It could help a lot when you have it and really suck if you don't, but shouldn't make or break. That is the point, of this video pretty much, is just that don't be married to one tool. Use it all, right? Use TA and quantitative strategies. But if you're going to find a way to trade for yourself, look at your own personality. How do you build your strategy? I don't know. That's for you to answer. Look at your own personality. Look at the way that you like to do. Some guys are reversal traders through and through, right? I'm just giving examples. Some guys are trend traders through and through. Find your personality and don't fight yourself. Just do what works for you. And focus on risk to return and just things that make sense to you. And how to build an automated strategy really for my quants out there. Do stuff that's really not sensitive to parameters, and again, prioritize risk to return. I hope that answers every question that you guys might have about this topic. Please comment things that you would like clarified that you straight up disagree with. You're not going to hurt my feelings. Check out in the description my indicator with Lux algo. And everybody, please have a phenomenal day. Goodbye.